In this video, we will talk about Hcmc. What is the company and why has it been at the center of many traders' attention lately? Are they right to be excited about this penny stock? And more importantly, should you buy its shares? We will cover all those topics in this video, so please watch it until the end. Hcmc is a penny stock that operates in the vape and electronic cigarette sector. Until recently, there have not been that many activities around the stock, but recently, its stock skyrocketed to historical highs because the company entered into a legal lawsuit against Philip Morris, the international conglomerate, for patent infringement. Before we look at the lawsuit, let's quickly dive into the company itself. This is important because it does give us somewhat of a general context surrounding this lawsuit and the value of the stock, and more specifically, the value of your trade. I would like to address some of the critics from an article against this company. Technically, the company has been losing money for many years. In 2019, it managed to reverse somewhat the trend, but of course, 2020 has not been a great year for them. This has been brought up in an article basically calling the company an overpriced, unprofitable, and trying to cling on this lawsuit to get some settlement money, which they probably won't get. This is their point of view. So, there are two main criticisms that I have regarding this article. The first one is that this company has not been prospering, despite the fact that the industry it operates in is growing at double digits every single year. Okay, so first of all, in terms of the absolute numbers, yes, the company has yet to reach profitability and a break-even. And also, I would say that the fact that this industry is essentially retail, and that people are probably going to find out more in the upcoming years about its possible health hazards, do not necessarily make me think that things will look very rosy, very quick for Hcmc. But here's the thing. That information is what financial statements show. And I would like to remind the author of this article that we, as traders, also trade off the market momentum and narratives. In other words, a company may be having a hard time. It doesn't really change the fact that this company stock may be in demand. Because otherwise, I wonder why so many of those EV stocks have taken off in 2020. Most people are fully aware that many of those companies will never in a million years reach profitability or even break-even point. But the potential gains are still there, as long as you can lock it in time. So, now that we have established a good chunk of why people are interested in this vaping accessories penny stock is because it's suing Philip Morris. The article says that the odds of this lawsuit are totally against Hcmc. But personally, I do have a different point of view. The lawsuit is about a product that Philip Morris developed called IQOS, essentially an electronic cigarette. Hcmc claims that because IQOS can heat up to 350 degrees, it is in the infringement of its patents in the US. Philip Morris responded by saying that, look, they have a patent and the authorization to sell this product in the United States and that it was authorized by the FDA. But see, here's the problem. The filing by Philip Morris eluded the fact that the temperature of those IQOSs will burn at 350 degrees. And in their European patent filing, they said that the temperature can reach between 250 and 440 degrees. In other words, that is probably the reason why so many people believe that Hcmc does have a point in this legal battle, and arguably may even have a good chance getting a settlement or licensing their patent to Philip Morris so that it can piggyback off this enormous player in the sector. Of course, that is the positive look at the whole situation. If I were to play the devil's advocate, I would probably say that there is a chance that the temperature argument may matter less than we think in the court of law, or that Philip Morris has enough lawyers on the payroll to drag this thing on for years. This brings me to my next point. In a legal battle situation like this one, there is often an overlooked factor that is the legal fees. If Philip Morris, the international conglomerate, has its in-house attorneys working from 9 to 5 just for them, the legal fees may be a lot less than you think. If you and we go in a legal firm and get some lawyers on a retainer, it may cost us something between $750 to $1,000 an hour per lawyer to work on this case, right? But if those lawyers are employees and work off a fixed salary, then PMI has the capacity to drag this thing on for a long time. Of course, for the argument that Hcmc does not have the capacity to outlast PMI, I would also caution against this argument because there are many ways to compensate your legal team, one of which is to promise them an amount of your settlement, as long as they're willing to work on it. Think of it like an LBO of a legal case where you kind of pay your lawyers with the money from the other side once you win the case. And if you don't win the case, they don't get paid that fat check that you promised them. So you don't have that much to lose. So with all that being said, should you buy the stock of Hcmc? I mean, after all, I think that's the main reason why you're still watching this video, right? It all depends on the amount of faith you put in the likelihood of a win or a settlement. Personally, I think that if you look at how the stock of Philip Morris has been unable to raise above a certain amount in the recent weeks or month, I would say that the lawsuit does have some people worried that there is more smoke to the fire than we think, and that the lawsuit has some real chances of winning, like a lot more than what this article is trying to say. Now, before I go further, this is very important. Just remember that this is not a financial advice, and you should always, do your own research before getting in a penny stock like this. If you really put all the little breadcrumbs together, you can see that they are actually onto something, and that there is at least an argument to enter in a position now, even if the risk and uncertainty are real going forward. So I would recommend to buy a maximum of 0.5 or 0.25% of your portfolio in the shares of Hcmc, preferably split in 3 to 5 purchases to make sure that you get in at a low cost. Thank you for watching. If you like my content, please like, comment, and subscribe to my channel. Also, please check out my YouTube page for other stock analysis videos.